Welcome to Monday's Market Outlook here at T3Live.com and TopGunOptions.com. Market was initially weak out of the gate this morning, folks, on just kind of a slew of, let's call it malaise around the world. Japan's GDP was a lot worse than initially reported. Got some negative manufacturing and data out of Germany and just overall in the Eurozone. A Eurozone warning hit stocks as currency and oil plumbs the depths of despair there. China's trade data wasn't as good as expected either, especially on the export side. Net, just kind of a shrug around the world of macroeconomic data. We had our jobs number on Friday, obviously, and if you listen to a lot of the cheerleaders in the financial media and the administration, it was the best jobs report ever. But obviously, if you read it, it was do you want some fries with that jobs report? And that's not a good thing. So we're not seeing quality jobs, kind of 150,000 full-time jobs, and the rest were in the services industry, secretaries, housekeepers, bartenders, all that type of stuff. Not begrudging what they do. I'm just saying that, again, it's the quality of the jobs, not the quantity that matter net, but we're just not seeing, not just seeing it out there, folks, but, in the absence of uber bad macroeconomic data, we head to the upside. So last night, as you can see, the China numbers came out there as I was crying into my beer over the Eagles loss. Today, nothing really. We get some labor market conditions index at 10 a.m. Tuesday, the JOLTS jobs opening data. Tuesday night, some China CPI, which I'll be taking a look at. I don't think it'll be too market moving on our end if their export data just kind of made our market shrug this morning. Nothing on Wednesday really here in the United States. Thursday, we're going to get core retail sales and regular retail sales, obviously weekly unemployment claims. Whenever you see the word core, it means X something. In this case, it's X autos. So we'll take a look at retail sales. And then on Friday, we'll get some inflation numbers and also some preliminary University of Michigan consumer sentiment. So net, in the absence, as I said, of bad macroeconomic data, we melt up. Here's a good-looking chart, kind of a gap down at the open. Not necessarily a gap down, but move to the downside on the macroeconomic data, and then here we go. We just go up. We melt to the upside. So we just knocked out a weekly options live trade brief where we were trying to get filled on an SPX. Let me clear this stuff off of here. It hangs out after leaving the chart up there. Try to get filled. We've been chasing this trade. It was $1.30, $1.35. Now it's all the way down to $1.10. We put on a bull put spread as the market opened down, and I said, well, that's just not gonna. With all this bad macroeconomic data out there, the market tends to open down, and then we recover right back and resume our upward climb for the 8th straight week. Make it, and that's exactly what we did. We got filled on an Apple bull put spread, and we're not chasing this Goog bear call spread. Goog's been doing this stair step to the downside, lower lows and lower highs, and we sold into that. This morning, or at least tried to. As you can see, that's SPX. Let's get Goog. As you can see, the lower lows. So net, there's the trend to the downside. We sold the bear call spread because each time we see this little bounce, sell off, and we had a bounce. We were going to see a little bit of a bounce, and then it's selling off here. So I didn't get filled on that. We're not going to chase it. So some folks got filled on that this morning, and happy for them, but I'm not going to chase that. So again, we melt to the upside, folks. In the absence of just bad, everything else is good, right? Until it's not. Even the Treasury, the Office of Financial Research, came out with a report saying, hey, there's just little liquidity in this market, and volatility is at record lows here, and heads up. And the VIX, our fear altimeter plumbed. We saw an 11 print in front of this, and the VIX being up 7% with the market flat is a little bit of a canary in the coal mine for me right now. People are starting to get a little creeped out and starting to grab some protection. So it might be a good time to do that. When vol's cheap, you buy it. When it's expensive, you sell it. And that sounds like a good idea to me. Okay. So happy hunting. Make sure you hedge. I'll be back with Tuesday's market sit rep here at Top Gun Options. We'll see you.